Tim, for all of the hand-wringing over Twitter and the distraction that it may be providing to Musk, can you argue that Tesla fundamentals have really been affected yet?
The fundamentals of Tesla have been affected by the overall market. The concern with investors, however, is that Elon is becoming distracted with Twitter, and that is a concern, especially as we go into a possible recession. Right? You would want your CEO to be fully engaged as the market conditions deteriorate, and that's kind of ultimately been one of the big worries about Elon as he's pursued all these different things over the years, and it has been considered one of the big risks.
Right. At the same time, he says things like he can go from 80 hours to 120 hours and he can handle all of this. How do potential margin loans, as Bloomberg reported, maybe change that equation? Does that cause more worries for investors, maybe lead to more of a direct impact?
Well, this spring, when the original Twitter financing deal included those margin loans, there was a lot of concern among some investors in Tesla that there would be an overhang, that this would introduce risk from Twitter into Tesla. And that is because essentially Elon has long been a cash poor billionaire. All of his wealth has been tied up in SpaceX and Tesla. And it was only recently that he's been unlocking that cash to buy Twitter. And so if the margin loans are called, he really only has a few ways to handle that. That's either sell the shares and cover the loans or put up more shares. And so ultimately, the concern is that there could be some kind of death spiral, that ultimately a lot of shares would go into the market and hurt the overall shares of Tesla's value.
Hey, Tim, one thing people are watching is if this capital structure truly gets revamped, what is the pain threshold for a revenue decline, right? I mean, can they, if they lose $1 billion in revenue, if it goes down into the threes, have you looked at that and thought about where maximum pain, where we begin to start to talk about existential risks to the platform?
Right, for Twitter. Yeah, I mean, that's the issue right here. You have these debt payments that are more than $1 billion. At the same time, you're seeing ad revenue collapse, or not collapse, but be pulled back as advertisers are worried about the future, about the kind of erratic or chaos at the company. And that's the concern. So it's, in some ways, classic Elon that they would be considering using these margin loans to somewhat reduce the risk at Twitter. Elon has a history of kind of focusing on the fire or the emergency in front of him and leaving those other issues of his empire to deal with at another time, right? So right now, the biggest problem he has is Twitter, and he is using potentially the resources of his kind of financial kingdom to try to address that. And we've seen that before, and it has put pressure on the other parts of his kingdom in the past. I think of 2016 when Solar City, the company that he was the largest investor and chairman, was in trouble. He had a lot of margin loans there as well. And it was seen by some as a bailout when Tesla bought that company to get out of trouble.